Nothing is scarier for a business owner than having a really low income year and not having any kind of cushion to cover that. Let's have a look at what it looks like. So what can happen for a business owner? We talked a little bit before about the S-curve that a business owner has. So generally speaking, we see fairly low income at the beginning, some pretty good growth as a business starts to grow in its middle years, and then some kind of plateau at the end. But everybody knows that things aren't that simple. If they were that simple, that would be great. But what we end up with is a very more variable income over time, and sometimes we get some dips where things really don't go all that well. Sometimes we get some dips where they're very low income years, and maybe they're combined with some kind of expense, so we even go negative in some years. What we do most of the time is we have some kind of reserve to cover that. The issue is a lot of people right now, because cash is so low, because we're seeing 1% returns, 0% returns on our cash, and it's all taxable, people are moving further and further along into more risky investments. So some risky investments that people might be putting on their corporate balance sheet are things like stocks or real estate. And there are some very specific issues with both of these. The issue with real estate is that if we have some real estate and sometime in the future we end up with this situation, the issue with real estate is, although we might have a positive balance at the beginning, when we put the money into real estate, it goes directly into a negative balance because we can no longer access that money. It's no longer liquid, no longer accessible, and then continues on like that. So we're not going to have access to that money for quite a while, or maybe even never. Maybe we just choose to buy that real estate and keep it forever. Not very liquid. We're probably not going to be able to sell it very easily at that point that we need it. The issue with stocks is that generally, when the economy is doing well, we're seeing better stock prices. When it's not doing so well, it's worse. Well, so what we see with stocks often is they follow the business curve to a certain extent. So in a year that we do really badly with our business, there's a reasonable chance that stocks are going to be down and we're going to have to sell at a significant loss. So stocks, while they're very liquid generally, in this case become very illiquid. So everybody is forced into something like cash because they need to be able to cover that eventuality or potentiality that we're not going to have the money at some point in the future. So what we need to do generally is we need to find an asset, because we know the cash doesn't work because of the low returns. We know the real estate doesn't work because it's illiquid. And we know the stocks don't work because they're volatile. We need an asset that's got a little bit of each of those things. We need an asset that is low volatility. Or stable. We need an asset that is liquid. And we need some kind of return on our invested capital. So when we're looking at a corporate balance sheet, we really need to focus on these kinds of principles. Tax treatment really helps. So that's the focus. With an asset, we need some kind of low volatility so that when we get to this point, we can access the money. We need something that's liquid. Again, when we get to this point, we can access the money. And we need some kind of return over time just because if we keep everything in cash, we're never going to keep up with the inflation to cover these kind of events if they're longer down the road. And tax treatment really helps us with the return, right? So I can't give you specific financial advice. This is generally kind of identifying some of the business issues that a business owner faces. If you want to talk more specifically about some solutions that we can put in place, I'm happy to talk to you. Please contact me in the DMs. Thanks a lot, and we'll talk to you tomorrow.